Hello, it's Robert Miner with Dynamic Traders Group with our brief update for our YouTube and Twitter subscribers. I haven't done one of these videos in 3 or 4 weeks because I've been really busy. I'm mostly preparing some educational material, which I'll share with you in the weeks to come. So I'm also going to change doing these and posting them from Saturday mornings. I'm going to have them posted Thursday evenings or on Friday mornings. That's because my Fridays get really busy, and Saturdays I like to avoid doing as much work as possible. So be sure you subscribe so you get notified whenever we put up one of these videos, but check back regularly, at least by Friday morning. You should have a video each week from now on. I'll get back into the schedule and the groove of things. Well, we're going to take a look this week at the S&P because it's in an interesting position. A lot of great information the market's giving us right now. We'll take a look at a little bit of the longer term potential position for the market, as well as a potential trade setup coming up here in the next few days. Remember, we don't forecast the markets here at Dynamic Traders Group. No professional trader does forecasting. They identify conditions with a high probability outcome and acceptable capital exposure so that they can then determine a specific trade strategy within the parameters of that technical position. Okay, let's get started. Take a look at the weekly S&P. So this is the S&P or the SPX, the cash data, weekly data, but it's just the weekly closes. Takes out a lot of the noise, gives us a better picture of the immediate position of the market. So this is just the weekly closes going back a few months. And the key piece of information here is that the weekly momentums are bearish and not oversold. Now our DT oscillator on the weekly data on our dual look back momentum positions are pretty reliable to indicate, in this case, that there's probably another 2 to 3 weeks sideways to down before a weekly low is complete. You can see I have this labeled an A and a B. We'll take a look at that in a minute. Of course, what would confirm this continued bearish trend? Well, it would be a weekly close below 42.04. I'm recording this on Thursday evening. Of course, the week's not complete yet, but this is a key piece of information that we can use to identify the probable position and trade strategy for the SPX. Now, here's the SPX daily data. Let me take just 1 minute with a brief commercial before we continue on with the details of the S&P trade. If you want more education, one thing, really good value for the money, check out my book, High Probability Trading Strategies. It's available from Amazon. We got a link down in the info section below. You can check that out. Really good information in that book for a complete trading strategy from entry to exit. Also, you might want to go to our website at dynamictraders.com. So sign up for our Traders News. It's absolutely free. We just need your email address, and that way you can access other updates and other trade strategies and tutorials. Okay, that's it. Let's get back and take a more detailed look and the S&P as well as a specific trade strategy for the days ahead. And it's the range data. And today, the SPX made what we call a dual look-back bull reversal. Now, if you're one of my followers on Twitter, you know yesterday I put up a chart with some comments that the S&P was in a position to complete a daily low, probably be sideways up for 3 or 4 days. Well, that's exactly, well, hasn't been 3 or 4 days, but it did continue to advance. Had a pretty big update today with up over 103 points, made a dual look-back bull reversal. That usually means that the S&P will be sideways to up for at least 2 to 3 trading days. That's in the short term at least. Because the weekly momentums are bearish and that weekly cycle is bearish, is more than likely following the next daily momentum bear reversal, which I suspect, by the way, will be made within about a day of next week's Fed announcement, which is next Wednesday the 4th. When that bear reversal is made, the next one is made, as long as the weekly momentums are still bearish, which more than likely they'll be, not going to be much change between tomorrow and at the end of the day tomorrow, is that'll be a setup, a dual time frame momentum setup, which will probably then continue the bearish trend and probably to a new low. We have a probable target price target around 39.73, and more than likely a time target for this section down before weekly lows complete around May 18th. Those are sort of preliminary targets. We'll see where the market's at following the next daily momentum bear reversal, probable around next anywhere from Tuesday to Thursday, about a day either side of the Fed announcement. So what's the green line? What I like to always do, regardless of all the technical analysis on a chart and the technical position, between the fib, time, and price, the Elliott Wave pattern, the dual time frame momentum, is identify, is there a single piece of information that's key and important? It's key either to confirm a trend direction or invalidate that trend direction. So right now, more than likely sideways up if you were a short-term trader. Boy, you had a great setup as of the end of the day yesterday. So what's the green line? It's the close back on April 18th, and it's 43.91.69. If the SPX should make a close above 43.91.69, and it's not too far from there, particularly after this big update today, that will put this bearish, continued bear trend in question. And if it closes above a little bit higher level at 44.59.44, that's this little swing high, which I got labeled as a wave 2. I should have question marks. I always have question marks on wave counts until they've been confirmed, but close above 44.59.45 would strongly signal that a new low is not going to be made as anticipated and as identified with the weekly momentums being bearish. So those are the two levels we look at. Number one, probably sideways up for 2 or 3 days anyway, and a close over 43.91.69 is that this bearish outlook, continued bearish outlook, is going to be questionable, and a close over 44.59.45 will void at least a probable continued bear trend. So what's the trade strategy? Well, again, if you're a short-term trader, long probably for the next 2 to 3 days. The ideal setup, and it's not a forecast because we don't forecast, we identify trade conditions with a high probability outcome. The ideal setup would be if the S&P made a daily momentum bear reversal in the next few days without having closed above 43.91.69. That would be ideal. That would mean everything was in place for a continued bear trend. And again, that trade strategy would be voided if the S&P closed above 43.91.69. So these are the kind of things that we update daily, the key pieces of information, the general trade strategies that we want to be looking at over the next few days to next few weeks. So by the way, I won't go into, we do that in our DT, every issue of our DT reports. So we won't go into the details today about why this is probably an A, probably a B, and then in Elliott Wave terms, that would mean we'd have a wave C to continue to a new low to probably around 39.72. Again, a daily close above 44.59.45 would void that outlook, and that this being an impulsive decline or an ending diagonal decline, one of those two. In Elliott terms, they call them motive waves. So that's what we're looking at over the next few days. And we just did a big picture report for the stock indexes a couple of weeks ago. It showed there's about actually 3 different near-term potential wave counts. We've eliminated one of them already. And we update those because, again, even though you have alternative wave counts, is that you can identify which confirms one wave count, which invalidates one or the other wave count, and then what should the follow through be. So Elliott Wave can be really helpful as long as you don't use it as a forecasting tool. And that's how most people use it. If you use it as a trade identification tool and to set up specific trade strategies, it's really, really helpful. Well, that's it for today. Be sure you subscribe so you can get notified each time we put up one of these YouTube videos. And I appreciate you stopping by, and stay healthy, stay safe, and I'll be back with you next week. Take care. Robert Miner, over and out for now.